I hope you've all had a fantastic week, and I really appreciate everyone taking the time out of your day to join me here today. I hope that you've all been staying cool with some of this extreme heat that we've been having lately. It's certainly been pretty brutal here on the East Coast where the RightCapital home office is located. So, wherever you're located across the country, I hope you're staying cool and staying safe. My name is Dan Scutcherino. I'm the Customer Learning and Development Consultant here at RightCapital, and I'm excited to be here with you for today's presentation on running a life insurance needs analysis in RightCapital. We are, of course, going to be taking a deeper dive today into the dedicated life insurance module within a client plan in RightCapital. But we're also going to be touching a little bit on life insurance data entry in the profile, as well as some other important settings, assumptions, and general considerations. So there will be a little something here for everyone today, whether you're someone whose service offerings are generally a bit more insurance focused, or somebody who maybe relies on the insurance module a bit more situationally, or in tandem with some of RightCapital's other tools. That being said, before we dive in for today, let's take a quick look at our agenda. In today's presentation, we're going to start by taking a look at some of those settings and assumptions that are going to be important to keep in mind when running an insurance analysis. We're then going to dive into our case study and take a look at the data entry process for existing life insurance in the profile net worth section. Then we're going to dive into the life insurance module and run a life insurance needs analysis for our clients. And as we're making our way through, we'll discuss some tips, tricks, and best practices along the way for putting together these kinds of insurance analyses. As always, we will be doing a live Q&A at the very end of the presentation. So if you do have any questions as we're making our way through, please feel free to write in using the questions field in the GoToWebinar control panel. I've got about 40 minutes of prepared content for you today, and then I'll be answering as many questions as I can until the top of the hour. Great, so I'm just going to take a moment to switch screens over to my RightCapital account. So bear with me just a moment and we can dive in. Perfect. So here we are in my advisor portal. And for those of you who might be a little bit newer to RightCapital, the advisor portal is generally going to be where we'll find some of those global settings and assumptions that you'll want to be aware of. Although the life insurance module is separate from the retirement module in RightCapital, where the bulk of those future projections live, it does still run a very similar forward-looking projection to the retirement section. And the reason I say that is because your advisor assumptions are going to be equally as important for running a life insurance analysis as they are for a retirement analysis in RightCapital. The global assumptions in RightCapital can be found in the More menu, which is the little three dots icon in the upper right here, and then the Assumptions sub-tab here. And just to give us all the quick rundown here, these assumptions provide you with a lot of flexibility as the advisor to tailor the future-looking projections in RightCapital to best suit your beliefs and your unique advising style. So for a life insurance analysis, an example of that might look like maybe using the forward-looking JP Morgan assumptions, which is going to result in more conservative returns in your projections than the historical index returns. So something like that can have a big impact on an insurance analysis and what that life insurance protection need might look like for our clients. In addition to the asset return assumptions, we can also tweak the various inflation rates used within our projections as well. So that could look something like assuming maybe a higher general inflation rate, which is going to increase the living expenses in our projections. And when it comes to a life insurance needs analysis in particular, there's an important assumption to keep in mind in the miscellaneous tab to the far right here, which is going to be the expense adjustment upon the death of a co-client. So this setting in particular, this percentage to the right here, is going to control how much living expenses are reduced when someone in our plan passes away. So as you can imagine, these assumptions are an important component, not just for the retirement projections, but for our life insurance needs analysis as well, which are essentially what if scenarios that will see one client or the other passing away at the end of the current year. So, while it's certainly important to review and dial in your assumptions at the global level here in the advisor portal, you can also tweak all of these same assumptions at the client specific level as well. So that's the next thing I'm going to show you here, and that's going to act as our segue into our case study for today. So let me open up our plan here for Katie and James. Perfect. And before we do anything else here, if we click into the gear icon in the upper right, and then click into the settings tab, this is where we can adjust those assumptions at the client level. So the asset return assumptions, those can be edited here in the return assumptions tab. And then both the inflation and miscellaneous assumptions can be adjusted in the other assumptions subtab here. So this is going to be really helpful for you if you ever need to change some assumptions for an insurance analysis that you're running without impacting your global assumptions or any of your other financial plans. So just as a quick example for you, maybe we want to change that expense adjustment. Maybe we want to use a 20% expense adjustment for just this client plan. You can toggle from global to customized assumptions here. We can enter our new assumption, and then we can click save. And that's going to be implemented within just this client household. And you can freely toggle between global and customized assumptions within all of your client plans at any time. So it's relatively easy to change these assumptions on the fly if need be. Perfect. Now that we've touched on assumptions, the next thing that I want to take a look at here today is the life insurance module. And this is going to be where we'll spend the majority of our time here today. The life insurance module is found within the insurance tab in the upper menu bar here. And by default, the life insurance module is the first module within this tab. So unless you've rearranged the layout of your client plan here, you should see this first and foremost within the insurance tab. And for anyone who might not be familiar with this particular module in RightCapital, I want to start by explaining a little bit about what's happening here at a high level. The life insurance module in RightCapital is, for all intents and purposes, actually quite similar in functionality to the retirement analysis module, which is, for a lot of advisors, really the bread and butter of the RightCapital software. So if you're comfortable with the retirement analysis, a lot of what we're about to go over should already be very familiar to you. What we have here is a fully holistic cash flow projection that's looking at every variable that we've entered into this client's plan, their income and savings, their expenses and goals, all of their assets, liabilities, and projected rate of return, based on their overall allocation. And we're taking all of that information in tandem with those assumptions that we just looked at, and we're projecting everything out continuously into the future. So that's really important to keep in mind here, that this is a fully built out cash flow projection. And again, just like the retirement analysis, we have our action items here at the bottom of the screen where we can start to make adjustments and customize the specific inputs. We do start with a bit of a limited selection here, but if we click the edit button in the lower right corner, we'll find that we can add and edit every single parameter and data entry input in this plan. So you're in complete control of everything happening in these projections. We'll dive into these action items more in just a bit here, but for now, the main difference between the life insurance module and the retirement analysis is that this module is running a very specific kind of what if scenario. Actually, it's running two different scenarios simultaneously on the left and right side of the page here. So what we see here are some hypotheticals that essentially show us if one client or the other were to pass away at the end of the current year, how much would the surviving client need in terms of a death benefit in order to make it to the end of their lifetime without running out of money? So that's the premise here. For our life insurance analysis, we see that represented by the protection need here at the top of the page, based on these long-term cash flow projections that are being run here for each surviving client. We can see what the dollar amount would be that they would need from that death benefit in year 2 of these projections to make sure that they can reach their planning horizon with at least $1 left to their name. In this particular plan here, without making any adjustments yet, we can see that in our first projection on the left, if Katie were to pass away, James does not have a protection need currently, meaning that even without a death benefit, he isn't projected to run out of money in this simulation at the moment. But on the right here, we can see that on the other hand, if James were to pass away, Katie would need at least $160,000 to make sure that she doesn't face any shortages before the end of her life. So that is generally what we're working with here in the life insurance module. And if we click through the rest of these subtabs here in the upper right, we can see some more specific details for both of those projections that are being run here. So these client-specific tabs, these are going to zero in a little bit more closely on each of these scenarios. So we can see that if Katie were to pass away here, what the income would look like from James's retirement through to the end of his plan, as well as what his invested assets are going to look like over that period of time as well. And then we have the exact same thing for our other simulation here if James were to pass away. So we can see exactly at what point Katie is going to start having income shortages here, and at what point her invested assets are going to be depleted without that death benefit payout. Last but certainly not least, we have our details tab here. And this is where we'll find our cash flows for these simulations. So there aren't quite as many cash flow tables here as there are in the retirement section, but all of the big ones are here. We have our cash flow summary, which is going to show us our yearly cash inflows and cash outflows for each year of our projections here. We have our ending account balance chart here, which is going to allow us to track the balances of each of the different account buckets over time. And then the rest of these tables are going to show us the movement of money essentially in and out of the different account buckets. So we have our additions and withdrawals. We can see RMDs when those kick in within the plan, and then our net cash flows, which is essentially all three of those things combined here. And we can view all of these cash flow tables for both of our what if scenarios here by using this little drop down in the upper right. In particular, I really like to draw attention to these cash flow tables here in the details tab, because this is where we can start to get a better understanding of exactly what's happening in each of our insurance analysis projections. And this is really important because understanding what's happening from a cash flow perspective is going to help us better understand what adjustments we might need to make using our action items to better tailor each of these scenarios and to get the output that we're looking for when it comes to that protection need. So we're going to spend this next bit of time here talking about ways that we can customize these projections. As we all know, there are a lot of variables in someone's life and in a financial plan that might change if somebody's partner were to pass away. And when we're entering a client's information into their profile, a lot of the time it isn't with the intention of having one of those clients pass away within a year of those projections starting, but it's definitely important to be able to account for some of those variables, especially when it comes to running a life insurance needs analysis like this. And this is where the action items come into play here. So before I start tweaking these numbers here, I do first want to point out that there is a proposed additional life insurance slider that you'll find here in the action items. And for clients without current insurance like this, you can use this slider to show them the impact that additional life insurance would have on these projections. So just as an example, let's dial up the proposed life insurance here to match the protection need if James were to pass away in this scenario. So if I enter 160,000 there and then click the refresh button in the lower right, that's going to update our proposed insurance on the right hand side here. So we can see that our proposed insurance now matches our protection need. And if we click back into this tab for James here, we're going to see some differences. We can see now the impact of the proposal with that additional coverage compared to the invested assets in the current plan. And we can also see in our cash flows in the details tab that other inflow occurring at the end of the first year of these projections. So we can see that insurance death benefit entering our projections now, and we can see the impact that that has on our scenario here. So in this case, with that additional benefit, Katie is no longer running out of money in this projection, with that proposed life insurance. And I do want to stress, that what we see with the protection need really is the bare minimum that the client would need in order to not run out of money. So, this protection need is not really a recommendation as much as it is the least possible amount required in order to end the client's life with at least $1 left. But, that being said, if you do want to build in a buffer, or maybe if you want to aim for a particular end-of-life asset value, and have the protection need calculated on top of that, we can accomplish that with our action items, specifically by adding a legacy goal to this plan. So that's the next thing I'm going to show us here is how we can do that. And this is a two-step process here. So the first thing that we'll need to do is add a legacy goal to our profile. So this is done in the Profile Goals tab in particular. We can click the Add Goal button in the upper right, and then choose the Legacy option from this dropdown. And in terms of actually filling out this card, we actually don't need to make any changes at the moment. We actually want to leave our target amount at $0 here. And the reason for that is by leaving this at $0, this won't impact our retirement analysis or our existing projections, but it will become an action item that we can choose to manually adjust going forward. So with this legacy goal now added to our profile, if we click back into our insurance module and then scroll back down to our action items here, we can click this edit button again in the lower right corner, and we'll now find that legacy goal as an option for us to select here. And by checking that box and then clicking save, we'll be able to make adjustments to that item. So now that we have this added here, we can add in our buffer or our target here in terms of ending assets. And just to keep things relatively simple, maybe these clients are aiming for $1 million left at the end of their plan, maybe to pass along to their children or their heirs. We can enter $1 million on both sides there for our legacy goal. And once we click refresh in the lower right, we're going to see our protection needs recalculated to account for this extra $1 million at the end of the plan. And we can see that as a result of that, we now have a protection need if Katie were to pass away where we didn't before. And the protection need if James were to pass away has increased from $160,000 to $260,000. So, by adding in this legacy goal, in a lot of ways, we're really turning this protection need from that bare minimum into something more akin to an actual recommendation for our clients. We can more confidently say now that if your goal is to have $1 million at the end of your life, if all the variables turn out like we've modeled them here in our projections, you'll need at least X amount of coverage. So the legacy goal is definitely going to be a useful tool in your toolkit as an advisor when it comes to running these insurance analyses. Of course, in addition to those legacy goals, you also have full control over all of the other variables within the plan as well. And what you're going to change is likely going to be highly plan dependent, but just know that if there are any profile inputs or plan parameters that you do want to change, you can do so here in the action items. And I will walk us through a few examples of that just so that we can all get a bit more comfortable with that process here. Maybe you're looking at the cash flows within that details tab, and you notice that maybe the living expenses aren't looking quite right. In addition to that expense adjustment assumption that we looked at a bit earlier, you can also opt to simply adjust the pre and post-retirement living expenses directly by checking those off on our checklist here. So I'm going to add those to our action items here. And let's say maybe they were looking a little bit low, or maybe we want to be a bit on the conservative side when it comes to the expenses that these clients are expecting going forward. We can increase our living expenses for pre and post retirement. And then once I click refresh, again, our protection need is going to be recalculated. So we see an increase in this case as a result of that. Another example, might be the client's future income. Maybe if someone's partner were to pass away, they might not be able to work as much, or maybe they might need to take a different job that pays a bit less, but frees up more time for them to take care of the kids or what have you. We can reduce the salary expectations for these projections as well. So by checking off the salary for each client here, we'll be able to adjust those figures in our projections. So in this case, maybe let's drop our salary expectations by 20,000 in each of these projections. Then we can click refresh. And again, we see that protection need recalculated. So suddenly, after having added in that legacy goal and tweaking the income and expenses in these projections, we see a very different story where there was no life insurance protection need previously for James. If Katie were to pass away, we now see a protection need of over $300,000. And those were some pretty simple examples, but in more complex plans, there's even more that you can do here with these action items. If a client owns a business or multiple properties, you'll find those entries here, and you can model selling those off earlier within these projections. If the client has some education goals, maybe they plan on putting one or more children through college, but if their spouse were to pass away, maybe they need to reevaluate the education costs or adjust how much they're planning to participate in that education funding. You can edit the cost of those college goals directly, or you can import an education strategy from the education module in RightCapital that maybe only shows partial funding with the child taking out loans to fund the rest. So, all things said and done, this tool is designed to be incredibly flexible. And at the end of the day, you can really tailor each and every element within these projections to give you a protection need that you and your clients can be confident in and comfortable with. Before we move on from the action items here, there are a couple of other specific items that I do want to make sure I highlight for you all here today. One of those items that is actually visible here by default on both sides is the debt strategy. And within this dropdown, there is an option that's unique to the life insurance module here, which is the pay off all debt immediately option. So if you're familiar at all with the debt strategy from the retirement section, you'll know that we can use this to import a debt proposal that we've curated in the debt management module in RightCapital and import that into our projections. But here in the life insurance module, we have this additional option to simply pay off all debt immediately when that first client passes away. So if I implement that here, we can see the impact on our protection need. It looks like our protection need went up a little bit in this particular instance. If Katie were to pass away, but we'll also be able to see that happening in the cash flows for this scenario as well. I believe in this case, the only debt they have is their mortgage. But if we click into the expenses section here, and then again into housing, we can see now that in this scenario where Katie passes away, we can see that their entire remaining mortgage balance is being paid off all at once. The other item that I want to make sure I highlight here is specifically the asset allocation strategy. So, in addition to those asset return assumptions that we looked at before, the way that the client's assets are actually, allocated is equally as important within these projections, and is going to have a noticeable impact on the projected rate of return and on the protection needs that we see. So, within this edit checklist here, by checking off this asset allocation item and then clicking save, we'll be able to change the asset allocation that we're using within these projections. So, maybe in our situation where, Katie's passing away next year, James would choose to rebalance his investment portfolio to something a little bit more moderate. Maybe he would be a bit more risk averse in this what if scenario. We can change from the current allocation to a moderate portfolio. And again, we can see the impact of that on the protection need when we click that refresh button. While we're on the topic of asset allocation here, I do want to take a quick moment to pivot back into the settings within this plan, and just take this opportunity to highlight the fact that some of the methodology settings are going to be just as important to be mindful of as the assumptions that we covered at the top of this presentation. So, when it comes to asset allocation in particular, the allocation method setting on the left-hand side here is a really crucial piece. How are we going to be projecting this client's investment allocation out into the future over the course of their projections? Are we going to assume the same allocation for all years and use a single long-term rate of return? Are we going to see the client's asset allocation shift at retirement using this pre and post retirement allocation option? Or do we want to use something like a glide path, which is going to see that client's investment portfolio trend conservative more gradually over the course of the plan? So these methodology settings in general are important to review and understand in RightCapital, but when it comes to the life insurance module in particular, I always like to make sure that I really drive home the fact that this is a comprehensive cash flow projection that we're working with here, and these settings are going to have an impact on those projections, just like they do in the retirement analysis projections. Things like the planning method setting here in the upper left. Do we want to spend off excess income within our life insurance analysis? Or do we want to assume that we're going to save and reinvest every penny of that excess? The withdrawal sequence right below that is another important one here. What order do we want these clients to pull from their investments when facing cash flow deficits year over year? So I won't go over every setting here just for the sake of time here today, but know that there are lots of resources in our help center for you when it comes to these methodology settings. And you can always reach out to the RightCapital support team as well if you have any questions about these settings as well. Perfect. Let me just take a quick look at the time here, folks. We've got a few things left on the agenda for today. Perfect. So the next thing that I want to cover here today is just a quick review of the data entry process for current life insurance. In addition to those clients who might not have insurance, maybe you want to run an insurance analysis for a client who does have life insurance to make sure that they either have enough or that they don't have too much. We can enter existing life insurance policies into the net worth section of the profile. And those entries are going to be factored into what we see back in the life insurance module. So within the profile net worth tab here, you can click the add account button in the upper right. And then if you hover your mouse over the insurance drop down here, you'll notice that we have a couple of different life insurance policy types to choose from here. So in this example, we'll say that maybe James has a whole life policy that we want to add. We can select the whole life option here from this list. And that's going to open up this drawer on the right side of our screen where we can enter the details of our policy. So the first two things it's going to ask you to do is specify the owner of the policy as well as the insured individual. Then on the right here, we can specify the beneficiary percentage. So this field is going to be important for our life insurance analysis. This determines what percentage of that death benefit that the co-client within the plan will receive when the client passes away. So this will be set to 100% by default, meaning the co-client will receive the entire death benefit, but if the co-client is maybe only going to receive a portion of that death benefit and the rest is going somewhere else, we can adjust this beneficiary percentage to reflect that. Next, we can enter the dollar amount for the annual premium. So let me enter some numbers here. And then we can specify, when that premium is going to end. So we can choose a specific calendar year, or after a specific number of years, maybe. If this is something like a single premium policy, you can set this to 1 year. If these are going to be lifelong premiums, we can set this to the end of our client's plan. So you've got quite a lot of flexibility here to make these premiums end whenever you need. And then we can enter the death benefit. So we'll say that maybe this is a $100,000 policy, just to keep things simple here. Because I selected a whole life policy, we do also have some additional fields at the bottom here to determine the cash value, if that's applicable. So you won't see these options if you select term or group life, but for whole and universal life, you can enter the current cash value on the policy. You can determine the growth on the cash value using this cash value approach here. And you can even model tax-free loans being distributed from that policy within the projections as well. So I am going to omit this particular aspect for now, but know that if you need to reflect any of these cash value components, that you're able to do so. Perfect. So now that we have this entered, we can click Save in the lower right. And now if we click back into our Insurance tab and take another look at the life insurance module here, we can see that in our projections where James is the one passing away, we now can see that $100,000 in current insurance in addition to that proposed insurance that we dialed in using our action items here. So for clients who do have current insurance, you can see very plainly here how their current coverage stacks up against that protection need that's being calculated based on our action items that we're running here. Perfect. So there's one more thing that I want to show all of you here within the plan for today. This is something that I always like to highlight when it comes to life insurance conversations in particular. I've talked a lot today about how the life insurance module, and the analysis that we're running here is a comprehensive cash flow analysis. And if that's something that you're looking to do, then this is the tool for you, and you have the capability to build that out. But that being said, there may be times when you don't necessarily need something quite so in depth. And there could be, myriad reasons for that, right? As we've seen here today, there are a lot of variables, settings, and assumptions to dial in and keep in mind when running these kinds of holistic cash flow projections. And not to mention, there's a lot more data collection that's required, a lot more information that you'll need to gather from your clients to put something like this together. So there is actually a separate tool that we can utilize in those situations where we might need something a little bit quicker and easier than what we see here with the life insurance module. And that's going to be our human life value calculator. This is something that you can find within the More menu, the little three dots icon to the left of the vault here. So the More menu calculator tab. And this is a tool that you can use either in place of or in tandem with the life insurance module. And what we have here, rather than a complete cash flow projection, is a more simple income replacement calculator. And there's actually a blurb at the bottom of the page here. The human life value calculator is designed to help clients understand the value of their future earnings prior to retirement, and to determine the potential amount of life insurance needed for planning purposes. So this tool is going to accomplish that for you. And it's actually going to pull in some key information automatically for you from the profile to save you the trouble of having to enter it yourself. It's going to pull in the salary information for both of our clients here, as well as their retirement ages, how many years until retirement for each. And in terms of data collection, that's really all that you need to gather from your clients in order to use this tool. You can very quickly and easily create a new client plan, enter just the salaries and the retirement ages, and then come straight here and use this tool without worrying about any of the other information. You do have some additional variables here that you can adjust with the discount rate and the tax rate sliders. The discount rate, of course, being the um, the thing that we can use to offset expected inflation and bring things back into today's dollars, and the tax rate we can use to simulate the expected tax rate that these clients will be impacted by. And that's going to give us essentially the present value of what these clients' future income is going to look like. Outside of these 4 sliders, there aren't any other data entry inputs, methodology settings, or assumptions that you need to worry about here. So I always like to say that one of RightCapital's biggest strengths is that it really gives you the flexibility to create plans that are as simple or as thorough as you need for any given client or situation. So you can use this human life value calculator for those simple income replacement calculations, in addition to the life insurance module for those more comprehensive cash flow projections. Perfect. We do have an extra couple of minutes here, so there is one more thing that I do want to point out quickly before we transition into our Q&A for today. And this is going to be more of a tip for you if you are preparing to present a life insurance analysis to a client. And this is generally a good tip to keep in mind when it comes to presenting in general. When you're presenting in the RightCapital software, you have the ability to tailor the layout of the client plan similar to how you would tailor a PDF report. And for something like a life insurance analysis, that might be a very different conversation than something like a general retirement overview or a social security filing conversation. So being able to tailor the layout of the plan on screen during those presentations is a really important piece of that. And the way that we can accomplish that in the advisor portal is within our client list here by using the planning access checklist. So let me make sure that we're looking at Katie and James here. And then within this planning access tab, if we were going to run, if we were preparing to present a life insurance analysis to these clients, we can make sure to only check off the boxes here that correspond with the particular modules in RightCapital that we want to show during that presentation. So maybe that's going to include things like the balance sheet, maybe the client's current liquidity, their asset allocation, if we want to take a look at how they're invested today. We can include that life insurance analysis so that we can see that within our plan. And then maybe the blueprint so we can get a nice summary of the client's current situation. After checking off all of those boxes, we can click the Save button in the lower right here. And then in the upper right corner here, instead of opening the client plan normally, we can instead open in client access mode here. And this is going to show us our streamlined, tailored view based on the selections that we just made within that planning access checklist. So we only see those essential pieces that we just selected, our balance sheet, our current liquidity analysis, and then we see our life insurance module here as well. So just an additional pro tip for you, if you are planning to present in software, you can really have a lot of granular control over what modules are shown on screen during those presentations.